Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have Khleif. Rod is one of the country's top real estate and peak performance luminaries. In fact, I just got back from his mastermind group last week where we had about 35 of the top multifamily syndicators there. And, I can attest, I come back smarter and more energized each time. I really love it. Rod has owned over 2,000 properties and has had incredible highs and lows, which has allowed him to navigate troubled seas better than most others. Rod also has founded the Tiny Hands Foundation, which has benefited more than 110,000 children in need. Welcome, Rod. It's an honor to have you on the podcast.
Thanks, Gary. It's interesting. I was just looking at, there's a conference this week in Charlotte, and your partner is going to be speaking there as well. I'm opening it up with, some mindset stuff because that's what I'm known for. But yeah, it was fun to see you at the multifamily boardroom last week. There was probably about $5 billion in assets represented by the members, which was, it was about 14 to 16 total in the group. And it's just such a treat. In fact, there'll be several members speaking this week at that MFIN thing. But yeah, let's have some fun, brother.
Yeah, absolutely. So obviously the seas are rough right now. Let's talk about the current environment. What are the things that you're seeing?
Well, we know that the Fed just raised the interest rate, benchmark interest rates, 75 basis points last week, or maybe the week before. And they're talking about doing, 50 to 75 basis points again in July. Effectively, interest rates have doubled. Almost all deals are being retraded or attempted to be retraded. And I hate retrading, but we even retraded one ourselves a couple nights ago with the seller and a broker. But the interest rate is the Fed's main tool to combat inflation. And and it sets a short-term borrowing rate for borrowers and consumers and so on and so forth. And, there was a lot of talk about this situation at the boardroom last week and, what we can expect and how troubled the debt markets are right now. But, I'm bearish because if anyone knows my story, I lost $50 million in 2008 and 9. And so, I felt up to this point, it felt like 2006 and 7 to me. But, I think it's going to get rough. Some of the people think in the group think it's not going to be that big a deal. I think it's going to be a bigger deal than people think, even though there is a lot of demand for housing. And today, employment is okay. But I really believe we're going to see unemployment. Inflation is going to continue. And I think we're actually going to hit some stagflation because the Fed thinks they can solve this by raising the rates. I think the problem is there's way too much cash out there. They printed so much freaking money. If you want to look at something interesting, go online and look at a picture of $1 trillion next to $1 billion, and it'll blow your mind. It's so much money. And so, when you print multiples of that, it creates a problem. And I think it's going to likely get a lot worse before it gets better. And so that said, is it a time to be scared? No, it's a time to get freaking excited, in my opinion, because I think there's going to be incredible opportunity. In 2008 and 9, I was hiding under a rock because I'd had my butt handed to me. That's not going to happen this time. I'm in a lot of cash. So here's the thing, the beautiful thing about multifamily is, yes, you need cash to buy it, but it doesn't have to be your own money. So, if you have access to cash, if you talk to people, partners, friends, and let them know, hey, we're getting excited, we're getting ready. Don't get caught up in all the media bullshit that's going to be out there. Sorry, I dropped a profanity bomb there, but don't get caught up in all that crap, because that's what it is. It's baloney. I remember back in 08 and 9, the news would say, oh, it's going to be terrible. Real estate's going to be terrible for 10 years. Hell, in multifamily, the rents were above 2006 levels within 3 years of 08. So that's how fast it bounced back. And the reason I started my podcast 6 years ago was it was my single family that pulled me down. The multifamily did just fine. I wouldn't have lost it if I hadn't cross collateralized it. So we're in for some pain, but again, with crisis comes opportunity. So I mentioned to you, I've got a boot camp coming up the end of July. Regardless of where you learn, get up to speed right now if you're interested in this business, because once you're in the thick of it and fear is pervasive, it's going to be hard to really get up to speed, because this business requires relationships, requires your ability to underwrite, and really just get up to speed quickly. And so, you want to do that right now. If you've ever been thinking about doing this, right now is the time to get very serious and learn this business. You agree?
Yeah, absolutely. Where is that boot camp? What are the days?
Thanks, man. Yeah, it's in Denver. It's July 29th, 30th, and 31st. Denver is United's hub, so there's nonstops from everywhere. But I'll give your peeps a hell of a deal. If you can come for $197 for all 3 days, and it's not a big sales pitch. I talk about my coaching for 30 minutes. You can ignore it if you want, but beyond that, it is just full-on training about this business. And I've had thousands of people attend. I've never had a complaint other than the food sucked or the room was too cold or something. But the content has never been about the content. And if you're interested, text my name, Rod, to 72345, Rod to 72345, and remember the code RODFRIEND is one word. And that's how you can come for 197. If you have any trouble, just DM me on any social channel. We'll get you lined out, because the price will ultimately be about $700, and it's double 197 right now, but you can come for 197. And it comes, that Rod Friend also gets you a couple awesome bonuses. It comes with my document library, which is I'm always updating, and I've spent tens of thousands of dollars on. And it comes with my deal evaluator spreadsheet software, so you can evaluate deals with training videos and stuff like that. So it's those two things alone are worth 10 times the 197. But again, or you can also go to rodindenver.com, but remember the code RODFRIEND. That's super important. Yeah, hope to see you there. I mean, we're going to sell out. And again, another piece of this business is it's a team sport, as you know, Gary, which is why you and I met last week. You want to be around other people that want this. And, the networking is just incredible at events like this. And, I'm going to another one this Thursday. It's a MFIN conference in Charlotte, same thing. There'll be a bunch of us there, a bunch of new people there. And because that networking is such a critical piece of this. I've got coaching students, they're called my warriors, and they own somewhere in the neighborhood of 70,000 units now, and really proud of that. I've only been teaching 5 years, and most of those units were done between warriors. I just want to share that, because that's an example of why this is a team sport. You agree with me?
Absolutely. You never know where your next partner is. And so you've got to go to these events. Mm-hmm. You're not necessarily going to meet investors, but it's so true. Your net worth is your network. And mm-hmm. I haven't been able to do the deals that I have done if I didn't go to conferences like yours, and not only the great content, but the people I've met, the energy that you get from that. It just energizes you for the next month to really push forward, to really seek new highs. So I highly recommend it.
Well, I'll tell you, you've never been to one of my boot camps. I don't think. My boot camps are not like other real estate events. You will laugh, you will cry. You will leave so freaking juiced, you'll be coming out of your skin, because I spend a lot of time on mindset too. The first hour is going to be spent on goal setting, because how the heck do you get anything if you don't know what it is? So, do we call it goal setting on steroids? And by the way, if you can't make it and you'd like to do that goal setting, I did it on New Year's Day this year. I do it every year at the first of the year. If you go to rodslinks.com, rods plural, links plural.com, at the bottom is my goal setting. I did it with music. It's professionally done. There's a guide you can download. It's free. I'm not going to try to sell you anything. anything. You should do it with your spouse. You should do it with your kids. You know, Gary, what's sad is people spend more time planning a freaking birthday party than they do designing their lives. And this is designing your life. Like I said, at my boot camp, you will leave juice, because we do a lot of personal development stuff as well. It's not just real estate. It's real estate until it's coming out your freaking ears. It's drinking through a fire hose, but it's also the most important piece, which is mindset. That's 80 to 90% of a person's success in anything is their mindset and psychology. So I have to spend time on that.
Yeah, absolutely. Absolutely. And now more than ever, when we're talking about these rough orders ahead, and let's circle back to where you see opportunities coming up,
Sure.
Where do you see that?
Yeah. And what you just said is really important. Your mindset, if you're listening and watching Gary and I here, you're a leader, and right now the world needs leaders more than ever. And so you really got to pay attention to where your focus is and what you're bringing in. You got to stand guard at your mind. Don't get me started on the fake news and the crap. Like I said, they put out on the media. It's not there to inform us. It's there to scare us and startle us. So don't get caught up in that. Really pay attention to that, because whatever you focus on gets larger, both positive or negative. So you got to bring in the good stuff. And so, I believe there's going to be opportunity in the entire spectrum of multifamily. Here's for example, a lot of deals in the larger deals that were done these last few years were done with bridge debt. And I know a lot of these operators did not have operating reserves put in the bank just in case. They weren't anticipating these huge rate increases. And there's going to be vacancy. That's just going to happen when people lose their jobs. There's going to be defaults and vacancy. So, they've already thrown so much money into this economy. I think they're going to be hard pressed to use that as a tool to help with this recession, because it's just going to exasperate things. So, they're in a really bad situation right now, which is why I think it's going to be tougher than people think. But again, there's going to be deals. Everything's going on sale. Okay. We're getting, like I say, concessions on deals, and that's going to continue, because there will be people that have to sell. There will be people that get in trouble. There'll be deals that go into receivership, and even in the smaller stuff, in the 5 to 50 unit range, there's going to be stuff that happens. There's going to be deals and defaults and so on and so forth. And, I believe there's going to be bank repos. And so again, if you have some liquidity yourself, I'm in a lot of cash right now, which I hate because inflation's killing it, but I'm in some cash, and more importantly, I'm talking to investors to get them ready for this, so that we can joint venture or do, maybe syndicate some deals when the prices are discounted. If you listen to my podcast called Lifetime Cash Flow Through Real Estate Investing, and I'm really excited. We just broke 13 million downloads, and we had our 700th episode the week before last. Yeah, just mind blowing, because you want to make God laugh. You tell me your plans. I never planned to do anything like that. But if you listen to it, you start to hear a pattern. Most of the guys with 5, 6, 7,000 doors started in 2009, 2010, 2011, and 12. That's what we call a clue, right? So,
Yeah, absolutely. I think, so many people talk about buying on the discount, but yet, man, when there's an opportunity, even the last few weeks, people have gone scared. It's like,
oh yeah. It's harder to raise money right now. It's harder to raise money right now. People are putting their head in the sand. That's human nature. And that's why it's so important to have these conversations with people and help them push through the fear, because, like Warren Buffett's famous quote, be fearful when others are greedy, be greedy when others are fearful. People are getting fearful. It's time to get greedy, guys. Okay. I hate it, but because there will be some pain involved on the other end of these deals that you're buying, but to not capitalize on it is silly, because there will be exponential opportunities for wealth. So if you can make it to Denver, please do. I promise you'll be glad you did. But if not, learn somewhere else, but learn right now. So
yeah, absolutely. Absolutely. Yeah, it's great. The networks that, that I built through your programs and whatnot, like I know I can call on any of those people in that mastermind and say, hey, I've never faced this problem before. Have you faced this? Can you help me out? And that is so invaluable. So definitely.
Well, what you teach, asset management, is going to be critical in what's coming. Okay. If you don't run a tight ship where you're staying on top of your KPIs, on your metrics on a literally a weekly basis, maybe even bi-weekly right now, paying attention to what's going on, paying attention to the competition. What are they marketing at? What are their features and benefits look like? And are they discounting? Are they offering incentives? All of that stuff. You need to be totally on your game right now, or you're going to have vacancy. And so, your podcast is going to be invaluable through this period.
Thanks. Yeah. I mean, when we hit COVID, a good operator will not only survive but thrive during those times, and that's why
pick up market share. Yep.
Asset management is so critical.
Yeah.
And not talked about enough.
What?
Yeah.
I'm looking forward to revisiting your book. I know your partner sent it to me a while back because I had him on my show, and I need to circle it back. And I actually wrote one myself that I give away at my boot camp. Everything you need to know about multifamily asset management. But it's because it's such a critical piece in what's going on right now. I mean, these new operators that haven't been through a real downturn, I'm afraid a few of them are going to get probably a good amount are going to get their butts kicked. And so, because they it's been gravy. I mean, it's been, geez, all you do is rent the place. The rents keep going up and up and up and up. And, that's going to, at the very least, plateau, but very likely pull back even a little bit in what's coming, in my opinion, again.
So besides asset management,
I'm wrong a lot. Like I told you, my kids say, you're tired of being wrong, because I thought COVID was going to be the catalyst. I was sure of it. And yeah, I was wrong. But I really believe this time it is. I think, and I think the Fed is really worried. The fact that they're going to do 5 more interest rate increases. They've indicated that. And like I said, they're going to do another big one in July. He came right out and said it. Powell came right out and said it. So anyway.
Yeah. My guess is they don't get to 5 because they overcorrect like a semi truck. And so if they get to 3, maybe
we'll see. You're probably right. And, I don't think it's going to have that big of an impact because again, there's so much money out there right now. Sure. It's going to slow people down from spending, but that's going to trigger the recession. And I mean, we're already in a recession. I mean, we've seen that in the GDP already, but Bank of America said we are technically in a recession right now, but again, may not be a big one. A lot of people at the mastermind don't think it's going to be a big one. I was the bear. I was the dissenting voice, but I hope I'm wrong, honest. Well, no, I don't, because I'd love to have some opportunity, more opportunity. I go back and forth. I don't want to see pain, but I'd sure love to capitalize, just because I was under a rock in 2008-9, one of the eyeball peeking out because I'd gotten my butt handed to me.
Yeah. Well, that's just a huge experience to have, so you're going to be more cautious
more cautious. Yes. But last time I got crushed by the wave. This time I'm surfing that bad boy. Okay.
Nice. So besides asset management, what should, a less experienced operator be wary of or
super conservative right now? Super conservative. You better have operating reserves, minimum 6 months operating reserves. You better, be stress testing the hell out of a deal. You better be, factoring 6.5 to maybe even 7% debt moving forward, and a higher cap rate, exit cap. It's got to be a higher exit cap. The days of these 10% basis points per year are over. Okay. You need to be realistic. 20 might even be short. That's what we're doing, but I'm a little concerned about that even. So, super conservative right now. Know what your break even is, know your debt. And like we're under contract on something right now, but we're going to see another rate increase before we close. And so what's the impact of that? Have we accounted for it? It's not a time to be super aggressive. People say, should I wait to buy? No, we're buying 2 or 3 deals right now, large deals, like 100 million in deals. So, at least I think these 2 of them were not under contract yet, but we're close. I think we're going to get them. But anyway, so we're still buying. But again, the operative word of the day is conservative. And, it's been super aggressive up to this point. And I think there's even a few that'll be closing in the next few weeks that are super aggressive. But I think these guys are going to be in for a rude awakening, the ones that haven't been through what I've been through. So And a lot of operators went, the operators that were just in multifamily, most of them did just fine through the crash. I mean, they survived for the most part. There was some fallout for the, people that weren't good operators, but it's going to be about asset management. It's going to be about being conservative. It's going to be about having operating reserves. It's going to be, it's super tight operations, super tight. How's your marketing? How, are you following a tenant from the minute they contact your office? What's the response time to, what's the, how is your, when, if they come to the office, what is the conversion rate to a lease, measuring every single step of that, what's your turnaround time on your maintenance? How many open work orders do you have? Are you responding? Are you following up with your tenants immediately to make sure they're thrilled? What can you do to build a culture at your asset so that people don't want to leave, make it a family type thing, and really focus on that right now. And that's what it's going to take to thrive through what's coming.
Absolutely. And I would add one more thing is inspiring your staff, motivating your staff to have that ownership thinking. It's not punching in, punching out, but if they
and that's difficult to do sometimes, but yes,
right.
if when they're walking around the complex, by God, they need to feel like they own it. If there's trash, they pick it up. If there's something wrong, they deal with it. They don't just have blinders on walking through the complex. They need to take ownership. They need to take ownership in the quality of the customer experience. And boy, you better be all over that. You better be mystery shopping them. You better be checking on them. You better, do surveys of your tenants, ask them what they think. And look for the critical feedback. You'll get good feedback, but look for the critical feedback. See who they love, see who didn't treat them well, and deal with it immediately, because that's what it's going to take.
Yeah, absolutely. Good times ahead. It'll be interesting.
That's right, baby. It's good times ahead. It's not bad times ahead. It's good times. So just, again, stay focused on the positive, pay attention to what you focus on. And you'll be just fine. You'll have blips of fear. You'll have or what achievers call stress, but just push through it. Stay focused on your goals. Stay focused on your outcomes. Don't focus on the pain. Focus on what you want. And again, go to rodslinks.com. Do my goal setting so you can have what you want in front of you. Get pictures. Put them in front of you. If you can come to Denver, again, text Rod to 72345 and remember the code RODFRIEND. And I promise you'll be glad you came.
Absolutely. I intend to be there myself. So
I'm you do? Awesome, brother.
Yeah.
Good. I'll remind me to get you a ticket. Awesome.
All right. Appreciate it.
Yeah.
Well, thank you so much for coming on the podcast and sharing your insights on the rough waters ahead, opportunity, but obviously being careful and taking advantage of it, because there is opportunity out there if you navigate the waters correctly.
Yeah, it's not. I won't say it's hugely there right now, but it's coming. It could be 6 months, a year, but it's coming. Yeah, if you're up to speed, you'll be ready.
All right, thank you so much, and
Thanks, brother.
We'll see you next week. Bye-bye.
To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and review this podcast, as it will help us grow our audience and reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website, breakofdaycapital.com, and sign up for our newsletter and or fill out our investor application.